gives me great pleasure to bring on board Mr. TV Narendran to talk about how earnings transpired for Tata Steel for the quarter gone by and what is in store for Tata Steel in coming quarters, given that one side there is an energy shock, there is a war situation, a geopolitical tension between Russia and Ukraine, and things on the China front is also looking slightly not stable given that there are COVID lockdowns. Mr. Narendran, good to have you back on ET Now, sir. Thank you very much for joining us. It's been a fantastic financial year for you. I will not be wrong if I say that for Tatas for the year gone by, steel was the new gold.
Thanks, Nikuj, for having me on the show. Yes, it's been a great year for us. What is more satisfying, even more satisfying, is it's been a good performance both in Europe and in India.
How much of the uptick which the steel industry has experienced in FY22 will get challenged? Challenged because of energy shock, challenged because of demand, challenged because of high inflation.
So, Nikuj, we are in a volatile space. That's so clear, right? Our input costs are fluctuating. Other inflation is an issue globally. Interest rates are going up. We are a capital-intensive industry. But having said that, I think structurally the industry is in a much better place than in the past. From a discipline point of view, there is very little excess capacity going around. It's becoming more a regional and a local trade issue. Exports out of China is no longer a threat. Ukraine and Russia were big exporters and they are no longer in the market. So for multiple reasons, the demand supply is far better balanced. The government focus on infrastructure spending across the world is there, which is good for steel demand. Even if this war, once it gets sorted out, there'll be reconstruction. Europe is going to spend a lot more on defense than it did in the past. And there's a lot of investment happening in Europe and elsewhere on transforming into a greener future. So I think overall, I expect the steel industry to have a few good years ahead. And nowhere in the steel industry, apart from in India, is capacity being added significantly, unlike in the past when steel prices were high and a lot of capacity was added in China. So I think overall, we are in a much better place, and that will reflect in the numbers for the industry. Tata Steel is in a much better place as a company, and so that'll get reflected in the Tata Steel numbers as well.
What is the plan in place to manage the volatility in coal prices? Because Tata Steel is still dependent on imported coke, imported coal, and given that there is a coal shortage for power sector, there really could be a challenge in terms of importing more coal for steel plants now.
So, the steel sector uses metallurgical coal, which has always been imported because India doesn't have good quality metallurgical coal. So only 10% of the coal available in India is metallurgical coal, and even only a fraction of that is really coming to the steel plants. So we are not dependent on domestic coal as much for our steel making. And imported coal has been volatile, but now it's stabilized quite a bit. I think what is, of course, of concern to us is if the power outages impact our customers, because steel plants typically have captive power plants, so we are not impacted by the grid power as much, but many of our customers are, and we are watchful of that from that perspective.
Given that you're generating more free cash flow, you've also increased your dividend payout. I'm asking you a very basic question because markets would compare your dividend payout ratio with what other companies are doing globally and what other Indian metal companies are doing. Do you see a change happening there? Because even though the dividend payout is significantly higher than what you've given in the past, it is significantly lower than what other metal companies are giving.
So I think, Nikuj, we've been a bit prudent because we have a lot of ambitions on growth in India. We want to double our capacity over the next 10 years. So if you look at globally metals and mining companies, some of them don't have the growth ambition that we have. So we need to make sure that we keep aside money for growth, because this is very value accretive growth, the growth in India. So our dividend payout is factored that in. We are trying to be as generous as possible with our shareholders, while at the same time focused on creating long-term value for them by investing in growth in India. So that's why you see a balance there.
So by the time your expansion of this leg, whether it is in Lanchal or other capacities, will start adding up, what would be the total planned capacity for Tata Steel in FY25?
So the FTA with Australia is helpful because that removes the 2.5% duty that was there on the imports of metallurgical coal. So when the FTA, in some sense, comes into play, I think later this year, we will have that benefit. As far as Russian coal is concerned, we used to buy about 3 million tons of coal out of Russia, largely PCI, which is what is used, which is pulverized coal, which is injected into the blast furnace. It's a different type of coal, but it's good quality PCI we used to import from there. We are no longer importing from Russia because of the various issues and difficulties in transacting. So we will source those coals out of Indonesia and Australia. So eventually, if things are back to normal with Russia, then of course we can look at continuing to import coal from Russia as well.
When we spoke last time, you did indicate that you expect steel prices to remain volatile with a positive bias. Any change in that view? Because a lot has changed after that. In terms of where the war has moved, how Russian steel is out of the market, how China in a sense is slowing down because of COVID curbs. What is your view on the steel cycle?
So we believe the spreads in Europe will continue to stay strong, simply because Russian and Ukrainian steel is no longer available there. Input costs have gone up in Europe because gas prices are high. And also there are transition costs which European steel makers are incurring to transition into a greener future. So there's no motivation or incentive for European steel companies to operate at lower price levels than they are. And imports is no longer as big a threat as they were some time back. As far as India is concerned, we are quite bullish about demand in India. That's why we believe that the bias is still positive and strong. It will fluctuate, but with a positive bias, as I said. And so we are optimistic and confident about the margins for the industry and certainly for Tata Steel.
And on the demand front, are you getting into some kind of resistance with your customers? You briefly alluded to the fact that there is a power shortage which is happening in a lot of manufacturing plants. Auto sector per se continues to suffer because of what is happening on the semiconductor front. So one side, there is a uptick in the cycle. Second side, there could be a drop in demand because of compulsions. Are you experiencing that?
So Nikunj, if you look at the auto sector, the strongest part of auto sector today is commercial vehicles, which is less dependent on semiconductors than passenger vehicles, and they're very steel intensive. So from that point of view, the demand for steel in auto sector has been stronger than it has been for the last few years. And the commercial volumes are back to where they were about 4 years back, and that's driven by the activity in construction and mining. So with high commodity prices, mining activity continues, and with the government focus on infrastructure, construction activity continues. So I'm quite positive about the prospects of commercial vehicles and the auto sector. And as the semiconductor issue sorts out, passengers vehicles will continue to be strong. I think on most popular models, there's a few months waiting list. So overall demand has been strong. Like I said, some factories are obviously impacted by the power cuts. It hurts both supply and demand because a lot of small scale producers of steel also suffer because of power. A lot of the secondary sector power suffers because of that. So that's something we are watchful. The other concern was when the steel prices were on the higher side, many of the smaller customers used up all their working capital limits. It's not that they were not profitable, but they didn't have the working capital lines. So that's also another area sometimes which is of concern. But overall, we expect demand to be quite strong this year. India is already producing about 120 million tons of steel and consuming about 105 million tons of steel. So that's pretty strong.
Just to wrap it up with a few more final questions and pretty much on the fine print. The net debt has declined to just about 50,000 crore. That takes your net debt to equity, net debt to EBITDA, which is now below 1, which is a very comfortable zone. Are you happy with where it is right now, or you want to bring it down more?
So I think we're very happy where we are, but certainly we want to bring it down a bit further. So we will continue to deleverage a little bit more. Certainly this year, at least $1 billion after allowing for the Neelachal acquisition, and we are comfortable we should be able to do that. Beyond that, we'll take a call because obviously we need to optimize the need to reduce debt further. But we also feel we can grow and deleverage at the same time because the India business is now of a certain scale and size that we generate enough cash flows to take care of our capital expenditure as well as deleveraging gold.
Your European business has now genuinely become Atmanirbhar, if I may use that word. The challenge is that when Europe is going through such an energy shock, could that actually have an impact in terms of the energy availability for the European steel business?
I think what we are watching is what's a plan in Europe to transition away from Russian gas, because some of the European countries, particularly Germany, Netherlands, etc., are dependent on Russian gas quite a bit. Some others are not. If you look at France, it's got enough nuclear capacity. So while Europe has announced that they will transition away from Russian gas, we are waiting for the details of that plan, because that has an impact on our own transition plans. Because when you look at the transition plans for the industry in Europe, it is about moving away from coal to gas and then to hydrogen. So that transition plan will be impacted by the plans that the European government makes. Just now, as far as gas prices are concerned, they peaked, but they've stabilized, and we are quite comfortably hedged. So we don't see an adverse impact of gas prices going forward, and whatever is the impact has already been absorbed in the current levels of costs.
So like you said that you don't expect the European business to run into rough weather. You pretty much expect the EBITDA numbers which you've shared in terms of profitability outlook for next 2 quarters, irrespective of what is happening in gas prices, they will remain there.
At least for Q1, yes. Q2, we'll give you a guidance when we talk about the Q1 results.
And just to wrap it up with just one big question, and this is just my personal observation. If I look at Tata Steel, you've expanded at the downturn of the cycle, whether it is Neelachal or whether it was acquisition of Bhushan Steel. You made some exits in last 6-12 months, and that too when we are at the peak of the cycle. Can I say that the international operations where you wanted to make an exit, whether it was in Asia and other geographies with the exception of Europe, most of your major exits have been done?
Yeah, pretty much. And even in Europe, what we've done in the last year is we've taken out a lot of corporate overheads, split the business. We run Netherlands separately and UK separately, and that brings a sharper focus, because the challenges and the opportunities in UK and Netherlands are very, very different. Actually, the Netherlands is a very, very strong business, one of the best positioned steel plants in Europe from a cost point of view in the European context. And we've been investing over the years in upgrading the product mix. So actually, we have probably one of the best steel plants in Europe in Netherlands, and it will be one of the most profitable steel plants in Europe, the Netherlands one. The UK one is a different challenge which you're dealing with, but UK also, as you can see, is a positive EBITDA business, and we need to see how to make it sustainable over the longer term.
So are you having the last laugh and feeling happy that the Thyssen Group deal did not go through?
Yeah, sometimes you create an opportunity out of a problem.
It's been a turnaround story. Well, Mr. Narendran, really appreciate your time. So glad you could join us, and thank you for joining us. And once again, congratulations. I mean, for record, Tata Steel for FY22 has been the most profitable Tata Group of companies. So congratulations on that.